Okay, welcome back. This is the last part of the non-theory or the bookkeeping part of the question that we were doing, and it is to prepare a reconciliation statement. And this last reconciliation statement is the reconciliation of net cash to movement in net debt. Now, it's very similar to the ordinary level ones that we've seen already, so I've just written it out as you would in the ordinary level questions as well. And you might notice there that I've left one gap because there's just one extra thing that goes into these higher level questions, and the thing that will go in here is the government securities, or the liquid resources, if you like. Okay, so the reason for it is, I suppose, at ordinary level, when we're calculating net debt, there are only two things we take into account, I guess: cash that you have on hand and in bank, and any debts you have, any loans in the form of debentures. And when I say cash in the bank, if you have an overdraft, we count that as another loan, which will be included as well. But in the higher level, when we're calculating net debt, we take into account any cash you have on hand or in the bank, any loans such as debentures, and also any liquid resources, which in this case is always government securities. And the reason we do is because we've said already in these questions that government securities are liquid. In other words, they can be turned into cash very easily. And if they can be turned into cash very easily, then we treat them just like we do cash when we're calculating net debt. So that's why we include them in here. So that's why there's going to be three things here that we're going to use when we're calculating the change in net debt. And also it's going to be these three things that we're going to use when we're calculating the net debt at the start of 2016 and at the end of 2016. Okay, so just to look at the first two, I filled these in already, but they're very straightforward. The increase in cash you just took from the cash flow statement, the last line of the cash flow statement that you just prepared, and the repayment of debentures, 170,000, you could take it from the cash flow statement, or again, just to see where we got it from for the cash flow statement, the debentures went from 350,000 that you owed down to 180,000, which means that you repaid 170,000 worth of loans, debenture loans, and during 2016 sometime. Okay, so that goes in there. And now I won't go into them again because it's the same reasoning, I suppose, behind the as it was with the ordinary level questions. If you're repaying some of your loans, it goes in as a plus. If you're getting more loans, more debenture loans, it will go in as a minus. Increase in cash goes in as a plus. If there was a decrease in cash, it goes in as a minus. Okay, so before we, or I suppose let's just put in the government securities. So I'm going to put down purchase of government securities, and of course you could have of liquid resources if you want as well. Securities, and then we'll look at what the purchase of government securities was. It went from 0 in 2015 to 40,000 worth in 2016, so you purchased 40,000 worth. And again, the rule is that since it's kind of like an increase in cash, because we say that these are liquid resources, they're similar to cash, they could quite easily be turned into cash, then if there's an increase in them, we put in it like a plus, just like we do an increase in cash. If it was a decrease in government securities, in other words, if you sold off the government securities that you had, then it would go in as a minus down here. So because it'd be like a decrease in your cash, if you, as it were. Okay, so then when we have these three items, we just total them together and get our change in net debt. In this case, it's the 170 plus the 40 plus the 5.5. That's 215,500. Okay, and then we go and we calculate our net debt at the start of 2016, which we already said in the other questions is really the same thing as net debt at the end of 2015. So we look at our balance sheet dated the 31st of the 12th, 2015, when we're trying to calculate this net debt figure. Okay, so it's the same thing. All we do is we calculate what kind of loans we have, and we calculate how much cash we have on hand, and we include government securities as cash because it's similar to cash. So we have at the end of 2015, so this is the 2015 balance sheet here, we have 350,000 worth of debenture loans. So that goes in as over here as a minus 350,000 because all loans go in as minuses and all cash goes in as pluses. Okay, and in the end, if we have a minus figure, we'll have a net debt. If we have a plus figure, it'll be net funds. Okay, so minus 350,000. Then as we look up here, this is something that we don't often get at ordinary level, but you'll notice there's a figure of 12,000 in the current liabilities, our creditors' amounts falling due within 1 year. That means that there was a bank overdraft. And now an overdraft is just another type of loan, so we must include it with our loans here, our debenture loans. So our overdraft, 12,000, must go in here. And since it is a loan as opposed to money in the bank, it goes in as a minus also. Okay, then we continue on up here to the current assets. We've no government securities, so we don't have to put anything in for that. And we have cash of 2,000 euros, so that goes in as a plus 2,000. And it's just those three items then that we use in order to calculate our net debt at the end of 2015, or if you like, net debt first 2016. So this is what, minus 360, isn't it? Minus 360. So I'm going to put that figure in here as minus 360. Okay, and then if we add the two of these together to give us this figure here, it should end up being the same as whatever we calculate for our net debt at the end of 2016. So let's just add them together. So since it's a minus, or a bigger minus than the plus figure, it's definitely going to be a net debt and not a net funds. So adding them together gives me 44, isn't it? 500 and a minus. Okay, so let's calculate the net debt at the end of 2016 and see if we come up with this figure here as well. So back to our balance sheets, and this time we're looking at the 2016 balance sheet and going down first of all to our debentures. Our debenture loan at this time of this year is 180,000. That's how much you owe, so it's a loan, so it'll go as a minus 180,000 over here. Okay, and then we go up along and we notice that there is a bank overdraft here also, so it's an 8,000 bank overdraft, and that's a type of loan, so we must put it in as a minus 8,000 also. Okay, and then back over to here we have 3,500 in cash, but now we also have 40,000 in government securities, which we said is a very liquid asset, so we treat it just like as if it is cash, and we include it when we're calculating our net debt. So that's going to be a plus 3,500 and a plus 40,000. So over here, plus 3,500 plus 40,000. And if we add them together, so that's minus 188 and plus 43.5, which is indeed minus, yes, 144,500, isn't it? So we're exactly the same as, exactly the same there. So we're happy with what we've got.